What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is December 6th of 2023. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, I not only want to talk about Bitcoin's recent rally of around 10% over the last 2 trading days, but outside of this, well, I'll spend some time to talk about where we see Bitcoin going over the next few weeks as we go into the anticipation of an ETF launching in January. And outside of that, focus in on our topic of altcoins and talk about some of the key trends that we're seeing, some that may be starting to fade, and outside of that, some other players that could potentially start to lead. We got a lot to uncover here in today's video, as well as a sponsored review of our long-term partner Energi, so stay tuned for it. You guys won't want to miss it. All right, let's go ahead and kick things off, guys. So I want to spend some time again to emphasize that since we broke out of what may be very well an ascending triangle here, consistent resistance, higher lows, we've continued to have multiple days of green breakout, and again, that momentum, as we talked about in the last video, is picking up here. And this is pretty expected to happen here because we're getting towards this stage where we're repeating very much what we saw back during the move in 2019. Irrespective of whether or not you guys believe this is going to new all-time highs, or if you believe this is a relief rally that we'll see some kind of greater correction afterwards, there is sheer amounts of anticipation going in here into the ETF. And very similar back here to April 2019, or here in May of 2019 into June. Again, we're seeing very minimal pullback here, higher lows generally over time, and then just a continued green continuation price as people are starting to realize that right now there is much more short-term demand, pent-up market buy-side pressure versus sell-side pressure. The market inflows right now are big, and any distribution we had at these ranges where people were selling positions have been cleared through. Someone is buying here. It could very well be BlackRock. It could be a dozen different ETF application providers who are going out there and trying to seed their spot Bitcoin ETFs. And again, as I've emphasized here, this is the buy side demand from the ETF guys. Irrespective of whether or not we're going to figure out that, come January, there's more demand than the existing shares satisfy, then in that case, maybe they'll seed more shares and that'll create more buy-side demand. But the providers of the ETF are what caused that buy-side pressure, which is playing out now. So don't be so shocked that when it comes time for that ETF, when even if you're going to hear about the institutional headlines of so many people going out and so many amount of inflows going into these ETFs through the publicly accepted metrics that we can start to utilize to get a sense of sentiment, is not going to matter so much. And that's why I think this is going to be a buy the hype, sell the news event where you're going to see some kind of fade here after that happens. But we are going through the month of December, and it does look like we very much have the momentum to come up here towards the ascending line of resistance between the relative highs in November 2022, here in March and April 2023. And also alongside the resistance back in March of 22. If we zoom out here, I think it becomes a lot more clear here that we've got this kind of, again, exponential build up here, similar to what we had back during the initial stages back here in December 2022 to April 2023. And I think we're going to come up right here around this 50K, 48, 50K range here. I'm not betting my cards on it. We're not going long on this short-term trade if you're wondering about what I'm doing personally. Just letting you guys know here that that's kind of where I see Bitcoin going as we are seeing that momentum into the ETF announcement. We're going to see whether or not it's going to be able to really kind of hold there. Sorry, let me actually get it. I've got a logarithmic here so you guys can see it properly. So again, that's kind of our range we're looking at of interest here. This is also where we saw resistance in the past. Just something to keep on your radar. Our market of interest, though, again, that we might consider building some trades in here in the near term is in Total 3, or the broader altcoin space. And what we've seen here is exactly what I want to see. What we've seen so far is multi-week support. If we zoom in here on Total 3, this is again excluding Ethereum and Bitcoin, taking in the broader altcoin space market cap, and finding multiple weeks of support on that 200-week moving average. This is the simple moving average versus the orange line, which is the EMA. And we can see that we've had a clear breakthrough here, the highest level since August. Now, we haven't had a weekly close above 440, which was the close here for back in the early parts of August 2022. But this is the highest point we've seen in over a year and a half for Total 3. It's not something that I feel like I've missed out a lot on. It's fine. This is the accumulation range. It's not a range where we want to try to catch falling knives and hope for the best. We want to look for these moments where after, say, a 33% premium like we've had here, that we've actually been able to set in potentially a signal that the train is leaving the station and it's time to get our tickets, to get on the ride and trade it. That's how we should be trading and thinking about this, guys. And now we've got a lot of different plays that are starting to signal that signal of confidence in the market. We've not only got the large caps, these are again the EXBS index that we talked about. which takes into account Ethereum, XRP, BNB, and Sol, the total market cap of the 4 largest altcoins in the market. And we bash Ethereum in there, Ether, because it is important to try to track those large caps, because if these plays aren't moving, it's very unlikely that the smaller ones are going to start moving. So we've seen that initial sign here. This is the highest close in these names since May. So we've already got what appears to be a clear breakout on these. I'm not saying that in the next week or so you can't pull back to that line of prior resistance and make it support or wait for the 200-day, but this is your signal of confidence that we got a breakout to the upside before we got one below the line of ascending support. We've got higher lows here, consistent resistance, and while Ethereum had previously broken through its line of support as an aggregate index here, and that's why I think it's important to watch, we can see that these plays are trading higher. And what's cool about that is that if we are really in for a continued run up here, you've got practically the same amount of upside, if not more, potentially here in these large cap plays. How long will it take? It could take longer, but generally speaking, we at least know that we've got a good risk reward setup here. And we have great entry points for pullbacks here, watching the 200-day, watching for this line of prior resistance becoming new support. And outside of that as well, we've got a ton of plays that we talked about on this channel, guys, like ordinals and all the other plays related to Bitcoin and potentially building programmable layers or applications on top of Bitcoin. ORDI in this case is the most well-known ordinals collection. And again, I think as you can see here within the price, and we're also going to talk about stacks as well, I think a lot of these names are ready and due for a pullback. They've had a really great run up. ORDI went from example back in October around $3 all the way here to $65 or $66 at the peak. So I think this is ready for a pullback. You know, we first talked kind of about potentially building an entry around this range here on the first pullback, around down towards this range. We were targeting hopefully to get it around here, around 16 to 14. But word of advice, guys, while we may have targets in mind for these entries, don't let that hold you back from starting to buy a little bit earlier than the rest of investors and traders. So you make sure you actually build those positions. If the narrative is strong enough, don't worry so much about getting at your perfect price. Make sure that you're starting to average in slowly, building those positions, especially if you're finding a continuous level of support and you're starting to see that pickup in momentum. Don't miss the trade just because you're waiting for a particular price point, because from that point, where we talked about it here on the channel when it was around 19-20 bucks, did a 3x here, right? So this is something you want to keep on your radar. Plays that are making multiples like this continue to usually do it throughout the cycle. It's just good to get them on discount opportunities. And I think for ORDI in this case, you've got a pretty wide range here. We're kind of in no man's land. We're far away from the prior point of resistance, which is around $28 on a broader altcoin pullback that may happen. But I wouldn't be waiting for that. I would be waiting again for this to come down a little bit lower, somewhere around the $40 to $35 range after a 50% pullback from that price range. And maybe there might be an entry there on some of those kind of key market leaders. And again, ORDI as a play here, if we consider it for market cap, it is still relatively small comparative to some of the other plays in the market. So being one of these leading collections here, I think is an important thing to keep in mind. Outside of that as well, STX, another one of our protocol kind of programmable layer projects for Bitcoin, up from around 42 cents up towards $1.25. This is now seen not only a what may be very well seen as like a doji candle here, again showing inconsistency in the trend after a 42% move. Looks like the market is ready for a pullback. We've seen that here with an 8% pullback today. I would, again, if I were to signal any kind of sentiment here, say that this is still probably going to be a play that has a lot more room to grow long term, but it needs a pullback here. And you've got a perfect kind of cupping formation here within the price. I would love to see this kind of pullback, maybe, albeit not maybe this far, but look towards levels like 89 cents, which has been resistance back here, and also here as well. So somewhere in that kind of ballpark between there and $1, and really solidify that range of support. And that might give you the opportunity to continue riding this trade higher. If you're finding within the day-by-day range of price, at that range you're getting support and you're not getting huge wicks down, but instead they're holding at that range, that's what you want to look for here. Now, going here as well, talking about the broader altcoin market, I have a couple different comments to make here. The first thing here is that, as I mentioned, not only are we seeing a kind of fade here on some of these plays, but outside of the large cap plays like ETH, XRP, BNB, and Sol in this case, holding up relatively well, over the last 24 hours, we're seeing a few altcoins here that are outpacing Bitcoin. So again, we've got Bitcoin here. We've got 1, 2, 3, 4, 5, 6, 7, 8, probably somewhere in the ballpark of around 15 altcoins that are actually outpacing Bitcoin. So Bitcoin dominance is still growing right now. That's the overwhelming point I'd want to make, which is that while you might be looking at CoinMarketCap and you might have some of your favorite content creators telling you, oh, you missed out on this, and we captured this trade, and we knew that this was going to be the ultimate play that takes off, and we had positions in it. Guys, don't get oversold in the reality here, this kind of false hope that like, oh, I would have known to buy Helium, which is up 64%, or Beam, or Celestia, or Avalanche. The key point here that you need to keep in mind is that right now, it is still overwhelmingly better to be in Bitcoin. Like right now, it is still the beneficial play here. Not many plays are outpacing Bitcoin. Now, if you take a look from a 7-day basis, yeah, maybe for example, there are some plays that technically, no, not really. I mean, Bitcoin is still outpacing over the last 7 days the overwhelming majority of the altcoin market here. So keep that in mind here when you're building your positions until we start to see Bitcoin dominance top out, which we've said is still probably going to go into January or late December. Then we need to probably still have an emphasis on the safe bet here. So don't get caught so much on seeing the 1 or 2 plays. And as much as we've been pretty much spot on here, the top play here has been ordinals in this case over the last 7 days. And we talked about that on the channel last week, that these plays are going to probably continue to keep going. Unless you're buying into market leaders like that at a nice pullback, I would probably be cautious about altcoins right now, especially those that are separate from Bitcoin. Nonetheless, it is good to see here that we are seeing some various protocols and even meme coins starting to pick up here like Doge and Pepe and Shiba. That is a sign for me that the risk-on sentiment is here, irrespective of whether or not you want to go buy those coins. I'm not telling you have to do that, but I'm just saying it's starting to signal, hey, we're getting towards a point where Bitcoin's getting a bit heavy. It's up in that 45, 50K range or 48, 50K range. And from there, we can start to probably see Bitcoin dominance top out, altcoins start to get some benefit. Maybe not exactly at those levels, but you guys probably remember from the last video we talked about those dominance levels. Now, one thing I want you guys to heed some caution on here. When I take a look, and I understand it's Google Trends, like I'm not just bringing this up because I want to shape a narrative or anything. I just want to signal this to you guys because I think it does hold some significance about the virality of crypto and the idea of bull markets, right? Of kind of broader trends. And the big thing I want to signify here is that for search terms like Bitcoin or crypto, what we're seeing here comparative to say 2020 is not as strong of a trend here for the growth and acceleration in altcoins as well as Bitcoin itself. I mean, you're generally still maintaining a pretty high level here comparative to the past of the previous trend search in this case, right? So there are still generally more people searching today for these two terms than there were back in say 2019, and that just makes sense if you're looking over the last 5 years as a comparison because there's just more participants in the market. Crypto is more established as a market, but we're not seeing the kind of acceleration in the trend as we would have expected. Search terms, for example, for Bitcoin, if we just bring it down here to the last, we did last 12 months, for example, I think you'd see a similar trend. We can see that again, that peak came in here back in October for Bitcoin. And altcoins, albeit maybe they're 1 point higher, the trend has been relatively stagnant. Bitcoin, on the other hand, has been actually deaccelerating here in its search trend. So that could be good or bad. Some people would view it that this is really great news because it signals that we don't even have the FOMO yet. The retail trading hasn't come in yet, and it's going to get even crazier when that happens. What I think is a little bit more of a rational view here, and it's just me pointing this out, guys, so you don't get caught up in this narrative. There's tons of headlines now that I saw one, for example, I think it was Qatar or Saudi Arabia. These huge sovereign wealth funds they want to build a multi-billion-dollar Bitcoin position, and there's all these ambitions to do X, Y, and Z, and central banks and Argentina are going to start buying up a lot of Bitcoin. It's going to cause this domino effect, and Bitcoin's just going to go to $1 million. Look, guys, I love Bitcoin as much as the next person. I'm not here to bash on the sector, but I'm going to be realistic with you all and setting expectations here about where markets can go. Markets have definitely accelerated here. It's good to see Bitcoin churning higher, but bear in mind here that this may not be the full-scale bull market that many people hope it for it to be, that it would go to new all-time highs, that it would continue accelerating higher. I'm only saying that here just as a warning of caution, guys, a message of caution that you guys should keep in mind so you don't get caught up in the FOMO. It doesn't mean you can't make trades. I mean, we've been talking about the plays that we believe are going to lead here, and man, we talked about some good plays here on the channel over the past week. Again, as I've told you guys here, we are very good at trading altcoins in the market. That's our specialty here. And it's very clear if you know what signs to look for in order to spot them, what those altcoins are going to be that are going to win out, that have fresh new narratives. If you set a high criterion, you will usually get a high quality plays. Doesn't mean you should put all your eggs in one basket, but if you can refine the darts you're going to throw at the dartboard, you really take your time to throw them good instead of just tossing them, good chance that you're going to probably make more money than most people who are just buying random altcoins or buying the same legacy plays that have done well in prior cycles but probably won't have their shining moment here because the narrative is now Bitcoin. It's on the focus of Bitcoin related technologies, as Bitcoin is the fastest growing asset. It's outpacing a lot of the altcoins, and anything that's going to be related to Bitcoin is probably going to benefit from that. But outside of this, well, as I mentioned, there will be lots of different L1s and L2s, lots of infrastructure plays that benefit here, and some that have been building over the last few years to fix some of the critical issues that are still persistent on so many networks. One of those we got to talk about, guys, is our sponsor and our partner for today's video, and that's Energi. Now, you guys know we've covered Energi for a long time here on the channel. Energi has just been on a tear over the last week. In total here, again, as you can just see over the last couple months, we've been featuring Energi here all throughout 2023 when it was around 4 to 5 cents, and now it's sitting around 18 cents. So you're talking about more than a 4x here in market capitalization for Energi. But even considering that here, with Energi's focus on security, and it's only being one of the only projects out there, mind you, that has this emphasis on security, is only sitting at a 12 million market cap here. Now, I want you guys to do your own due diligence on Energi as a product. I'm not here to shill it in this case. They've been a long-term partner of our channel, and for me, one of the few blockchains that's actually focused on fixing crypto's biggest issue beyond user experience, and that's security, the constant hacks, the constant smart contract exploits, and having no repercussions for hackers or exploiters who are essentially attacking the crypto ecosystem and robbing it of thousands of dedicated users and their own money and time and attention to the space. So I want to spend some time today to talk about some of the big updates around Energi, talk a little bit about why I'm bullish on Energi as a protocol long term, and why I think Tommy and the team have built something really spectacular. So let's go ahead and kick off the review for Energi. Now, before we kick things off, I wanted to start by saying that I know many of you have probably heard me talk about Energi over the last few years. We've been covering Energi as far back as 2018 as they've been heads down on the tech and looking to finally realize it here in the next couple of years throughout crypto. A lot of you have been wondering about where do you get Energi, how do you get involved, how do you get your wallet set up, and how do you just learn more about the project itself? Well, if you do want to learn more about it, you can always head over to energi.world, which is the main website that has all types of learning resources around the project. But outside of that as well, there's the energi.world/get Energi page, which I'll leave a link down below in the description. It has connections to how to get your wallet set up, all of the decentralized as well as centralized exchanges for Energi, and also along with that as well, how you can actually go about engaging with the Energi blockchain itself. And last but not least as well, you guys can always check it out on Dex Tools, which gives you a better interface if you're looking to do more active trading in the market, and also follow Tommy at TommyWorldPower on Twitter. Tommy gives a lot of great updates around the protocol itself. He's the head of the project and has been since its inception. So you guys will get all kinds of great tech updates as well as progress on some of their core projects like GMI or Gonna Make It, which is their key NFT platform that they're building at the moment. Nonetheless, I want to take a step back here and talk a little bit about Energi as a project, because I think it's important to fundamentally understand why we're so optimistic on Energi. Energi over the last couple of years has picked from a lot of great protocols some key features like governance and its treasury, as well as being a scalable EVM compatible chain just as good as Polygon or Binance Smart Chain or Arbitrum or Optimism. You can do anything that you would do on Ethereum or a lot of these alternative L1 or L2s on the Energi blockchain. Now, scalability and having core smart contract functionality is one thing, but the one thing that Energi has here that really is a complete standout feature that Binance Smart Chain, Polygon, Arbitrum, Optimism, Ethereum itself, and all the other L1 and L2s don't have is a degree of security. And this is a big focus for me. There was actually a really cool video I saw recently that Tom had sent to me from Mark Yutso, who is essentially one of the co-managers of one of the largest crypto funds in the space. He stated a description that essentially the ultimate store of value is essentially a network in this case that has the least amount of hacks, that is basically the most secure chain to store value. And I think that this is a really interesting definition, and albeit he's much more focused in Bitcoin and was describing the core value of Bitcoin as a network, I think this actually makes a lot of sense when it comes to EVM compatible chains, or let alone any chain that has programmable smart contracts or decentralized applications. Simply put here, I think Energi is the best positioned when it comes to security because of its focus on defense in depth. If you guys haven't heard about this yet, or this concept that Energi has been perfecting over the last few years, they essentially have what no chain has in regards to protecting user funds from personalized attacks, protocol-wide exploits, bridging attacks, all types of different frameworks where hackers could exploit and steal your energy, steal your various tokens or cryptocurrencies on the network itself. And this puts Energi in an incredibly powerful position. It is the only chain that has been able to stop over 95% of attacks and exploits in smart contracts and personalized attacks. And if this were the case on Ethereum and other L1s and L2s, we'd probably be at a much greater point of adoption, because you know when you've been hacked, when you've had an exploiter, if you know someone who's been impacted, it can ruin your experience and relationship with crypto. And rightfully so, it's your money. There should be repercussions. There should be protective layers in place that actually make sure to protect your funds. And that's what defense in depth does. Essentially speaking, Al Rollin, in this case, one of the team members who focuses on security within Energi as a network, he's focused on describing what they have built known as defense in depth. This is a traditional cybersecurity practice that unfortunately is not practiced much in the blockchain world, but is easily as applicable here to have multiple layers of security to prevent any type of exploit in a network, so that if one layer doesn't work, right, for example, let's say there's a smart contract exploit or a user-driven issue where they accidentally, for example, sent crypto to the wrong address, where people were doing sandwich attacks, all types of different things that can happen within crypto and DeFi, that there's additional layers of security that are going to protect you so that your funds are not stolen from that said hacker. So they can't get it to an exchange, so they can't liquidate your funds, and so that you'll never see them again. We want to make sure that does not happen. So how does defense in depth work here? Well, there's a really great protective layer here that we're going to discuss around the 5,000 block confirmation required for central exchange deposits for Energi as a network. This is a huge security overhaul here. Now, this essentially allows you to make sure that you're going to have a long extended window of time in order to address and notify the governance system of Energi that your funds have been stolen by a malicious hacker. Now, it does give a little bit of time delay before you could say take your Energi to an exchange and sell it. That's one fair point to keep in mind, but there's always Energi USD and other types of stable means of value if you're really looking to get towards a fiat value much quicker. Essentially speaking, though, this is how Energi protects its users. The victim reports a crime after receiving an alert. This is, again, something that's not a default standard in many wallets. In this case, Energi by default has notifications where you can get notified when funds have been moved from your account, not only so you can track your own transactions you've done, but also if there's an exploit of some sort on your account. Once this report is made, the EBI, or Energi Bureau of Investigations, will vote to temporarily freeze the attacker's address. So essentially freezing them from being able to actually access those funds, confirming the transaction, in this case if they were to move it towards an exchange wallet on CoinEx or one of the other centralized exchanges or decentralized exchanges for Energi, immobilizing the assets. The EBI will conduct an initial investigation, and if the verified crime is found, a governance vote freezes the attacker's address pending a thorough investigation. Once this has been completed, the next step happens that is really cool. Instead of reversing the chain and interfering with a decentralized network, the decentralized governance creates a separate account in this case to transfer the funds and then receives them back to the original owner of those funds. So this is not rolling back the chain. This is a decentralized governance process, actually taking back those funds and sending them back to the rightful owner. And I think this is an incredibly powerful use case here, because I understand a lot of people would look at this and think, oh, it's not decentralized, or oh, this is, the governance system is too powerful in this case, Energi. The key point, though, you guys need to keep in mind is that blockchain technology, irrespective of whether or not long-term we would want this to be the standard in the industry, is incredibly novel. And the constant exploits and hacks are proof of this. There is no room for debate about it. If we are thinking that it's okay, that it's your keys, your crypto, and that there can't be any protective layers here in the early days of crypto, we will never see mainstream adoption. And I think Energi gets that here. This is going to be the catalyst that's going to allow for a few key things. It's not only a protocol by and for the people, in this case, the users who are getting started in crypto, from beginners to even experts who get exploited in crypto. But outside of that as well, it's going to allow for Energi to be a test bed for some of the greatest applications we have yet to see in DeFi. Being EVM compatible, you can already export all of the existing applications from Ethereum onto Energi, or any of the L1 or L2s that are also EVM compatible. So not only are they going to have their own platform, in this case for NFTs, GMI are going to make it where you can already go out there and list NFTs, you can mint them, list them on the market, buy and sell and trade NFTs, and there's also royalties for those NFT creators, which is a huge benefit. This is where OpenSea has completely dropped the ball, and GMI is really on the forefront of and bringing back those royalties to artists and making the NFT market sustainable. Not only that, but it's going to basically be able to allow for a whole range of new applications that have yet to been built. So they have Energy Swap, they have GMI that's coming up, but for all the other various use cases in DeFi that we know of, whether it be derivatives, whether it be, for example, I'm thinking about like lending, staking protocols, an equivalent of MakerDAO, where you could use Energy as collateral, as the most safe and secure form of collateral. In this case, we can start to embed one of the more well-known developer mindsets from Andre Cronje. Now, many of you might remember during DeFi summer in 2019 and 2020, Andre Cronje was a bit of an infamous developer because he would apply a strategy of testing in prod, or developing or deploying to prod, which is deploying in production. It's a very fancy way of saying that essentially when you're building a new DeFi app, instead of deploying it to Ethereum's testnet, where if something goes wrong and people find an exploit, it's not the end of the world, it's fake money. In this case, he would deploy straight to mainnet because he was able to get more users trying out the protocols. People had real money at stake. It was able to allow for people to have more stake and interest in what he was building. The problem is that if something went wrong, as it tended to usually be the case, the problem was this new innovative protocol, which might have even been a good idea, had an exploit. There was no repercussions. Andre Cronje didn't know his users anything. He told them, use it at your own risk. And people ended up losing a lot of money. Now, I'm not blaming Andre Cronje exactly for that, but it's not a sensible mindset on Ethereum, where you have no protective layers for the end user. You have no guardrails to protect users from making key mistakes. Whereas on Energi, we do have those guardrails. We have those means of security. We have those layers that are going to prevent people from exploiting. So we won't have events like the Kyber swap hack that happened recently for 48 million, one of the dozens upon dozens of multi-million-dollar hacks that have happened this year alone, year after year. Billions of dollars are stolen from this space. And it wasn't just Kyber. We saw even Justin Sun, one of the hugest, most wealthiest people in the crypto space, getting exploited through the Hecko bridge in this case. We're over 83 million. So in just 2 hacks, $120 million stolen. Like, how can this be normal in the crypto space? How can this just be the way things go? If we really want these protocols, these decentralized, programmable, smart contract layers in the crypto space to be able to scale out to the trillions of dollars of value and liquidity and tokenized assets that we want to bring into the crypto space from traditional finance, you can't have this going on. JP Morgan, Goldman Sachs, all of the investment banks and investment managers and all of those traditional assets are going to stay exactly where they are unless we can start to account for security. You not only provide the core infrastructure for new innovative applications, for NFTs, for, in this case, Energy Swap with the ability to trade from one token to another, but you also, in order to get those really valuable new DeFi applications, you're going to have to be able to deploy in production, get things out quickly, build innovative ideas, but not have to worry about the repercussions if something goes wrong. To have those guardrails in place. And I think that Energi is the only network that has got that. It's the only network out there that I know of that actually has that security confirmation time and also has built-in alerts and a governance system that can actually protect end users from these types of exploits. This is something that's so critical, guys, to understand if you're looking for alternative L1s or L2s. And if you're focusing on anything outside of the Bitcoin ecosystem, you've got to come back and again look at it from a valuation perspective and think, okay, There are networks out there like Polygon that are multiple $billion in market capitalization. What is new that they're offering? Right? I have nothing against Sandeep and the team. I followed it since it was Matic, right? I followed Arbitrum and Optimism. I was an early adopter because I've been in DeFi and I've been a big supporter of all these L1 and L2s. But the question you can ask is, what do they have new to offer to the table? Energi here is a less than $15 million network in its total diluted market cap. And outside of that as well, it fixes a lot of the key issues that so many chains struggle from. It never had an ICO or pre-mine, in this case setting it in a great position, I think, in the eye of regulators. But outside of that as well, their average transaction fee is minimal, less than 1 cent. You have on-chain governance, a self-funding treasury that can help to self-fund and develop ecosystem projects, the layer 2 built in for scaling in this case, where they can conduct much more transactions utilizing their masternodes. And speaking of staking and masternode rewards, you can get 9 to 19% here on average between these different types of rewards, depending on how you want to stake it. So this is something that, again, I think we need to keep on our radar, guys. It's one of the few small cap plays that I feel confident talking about, because I've seen Energi not only be valued higher in the past, but outside of this, well, Energi and Tommy and the team have been working the last couple of years not on marketing, but on building the best blockchain, trying to build the best L1 and L2 for developing smart contracts. And while I won't say here at the end of the day, guys, you need to go all into anything, I wouldn't advise that. I would just say to do your own research on Energi and see if it might be for you. And if you're interested to learn more about it, I highly recommend you guys check out the links down below in the description. But as I mentioned again, consider following Tommy over on Twitter. Feel free to reach out to him if you're a developer or someone who's looking to build a project or raise capital in the space and develop on Energi. Definitely reach out to him via DM. He's got his messages open. And I think that this is a really cool approach here. This is kind of fast, quick build, getting ideas out there, breaking things, and then still having the security parameters to make sure that things don't go wrong, that will allow for some really exciting innovation that I've been dying to see in the crypto space for a long time, that people just don't take the time to do on Ethereum because there aren't those security guardrails. You have so much at stake and unfortunately so much to lose rather than gain, as with any type of startup idea. But it's even worse when you consider just how bad it is developing in the EVM systems right now, where there's no guardrails of security to make sure that those applications actually function as intended. That being said, guys, again, check out the links down below in the description. I hope you guys enjoyed not only this review of Energi, but also the core part of the video. If you did, consider dropping a like. It's one of the greatest ways you can support the channel. But until the next one, everyone, thank you all so much for watching. I'll see you guys on the next video on Friday at 6 a.m. Eastern Standard Time. Take care, stay safe, trade smart, and I'll see you guys in the next video. Take care, everyone.